G'day guys, welcome to the October property market update. We're going to break down some of Australia's leading analysts today and talk about some of the changes that we've seen over the last month. I'm going to hook straight into some juicy details from CoreLogic and CBA about the home prices and the movements for the year to date and also over the month. So looking at September, every one of the big cities in Australia saw property prices increase except for Hobart. So we saw Sydney go up by just 1% last month, Melbourne up by 0.4%, Brisbane still leading the charge at the moment here in the last few months, going up 1.3%, and Perth doing extremely well, going up 1.3% in September as well. Now, when we look at the year to date, we've seen some massive capital gains around the country, mostly in Sydney, Brisbane, Perth and Adelaide, with Sydney leading the charge year to date with property prices up 10.6%. Now that is a huge growth year so far. Brisbane property prices up 9.1%, Perth property prices up 8.8%, the national average up 7.9%. So this is a huge recovery that we've seen this year, and things don't appear to be slowing down at the moment.
Really exciting stuff happening at the moment. As we know, the RBA has held the cash rate for the fourth consecutive month, which is obviously a real big reason why some of this price growth is now sitting quite strong. Consumer sentiment is up. The spring months or spring and early summer months are always the best in terms of performance for the real estate market, especially here in Queensland. So we've got Brisbane quarterly price growth up 3.9%. Brisbane's price growth has risen for the 8th consecutive month. As well as that, we've got vacancy rates reaching record new lows, and national rents have risen for 38 consecutive months, according to CoreLogic. So
I don't envy the renters at the moment. They're really, really feeling it.
I know it's a really hard time to be a renter at the moment. Vacancy rates are so low, it's extremely competitive, and rents are continuing to rise. Advertised stock levels in Brisbane are rising at the moment, which is great to see because they've been down at record lows over the last few months.
As Crystal said, the listings are on the rise at the moment, and finally, we need some more listings to support the demand that we've got at the moment. So looking around the country in the biggest capital cities, over the last month, listings are up 12.2% in Sydney and up 10.5% in Melbourne. Brisbane listings were up 8%, Perth listings up 8.2%, and the national average up 9.3% over the last month. So this is really good news to start to see some more listings hit the market. Creates more supply and creates a bit more of an equilibrium between supply and demand. Now, whilst these numbers look good month on month, the yearly isn't looking too good at the moment, unfortunately. So if we compare September of 2023 to September of 2022, the listings are essentially down in Sydney, Melbourne, Brisbane, Perth, and just up a little bit nationally. Most of that being driven by the regional markets. Now, the two markets in Australia where listings are chronically undersupplied right now is Brisbane and Perth. So listings are down 11% year on year in Brisbane and down 17% year on year in Perth. And both of these markets, including Adelaide, currently have listings at 40% below the 5-year average. So this is really fueling those property prices and pushing those capital gains a little bit higher because we just do not have enough listings. Now, I want to go into talk about the distressed listings as well, because the media's been talking about this mortgage rate cliff, this really scary thing that's coming that hasn't come yet.
Yeah, exactly.
We look at those capital growth rates that we were just talking about, and that's no housing crisis. That's boom conditions. So looking over the month, the distressed listings were up in Sydney by about 4%, up in Victoria by about 1.5%, up in Brisbane by just 1%, up in WA by 3.6%, and the national average up 1.3%. But more importantly, year to date, those distressed listings are actually down in most of those markets. So what this indicates is things are better today than they were 12 months ago for homeowners. So New South Wales, the distressed listings are down 3.2% year on year. Victoria is up 12.2%. So a lot more distressed listings in Melbourne, probably why that market isn't performing too well. Crazy thing is the distressed listings in Queensland are down 29.2%.
Wow.
So there's not many distressed listings at all in Brisbane or Queensland at the moment. Similar numbers for WA at about 28.7%, and the national average down 16.7%. So when I look at these numbers, I don't think there's any mortgage rate cliff coming. I don't know, but based on the data indicated from SQM, CBA, CoreLogic, just doesn't appear to be a reality.
No, it's really hard to know what's going to come. I know in CoreLogic's latest update, Tim Lawless was saying that most people have now come off those fixed rates that we're expecting, sort of people that fixed mid-COVID at really low rates are now coming off. There are people out there still with high levels of savings, so maybe that distressed sort of listings hasn't hit yet. They're chipping into their savings before they're feeling the pinch. But I don't know. I think things are looking really, really positive from that perspective, and people aren't feeling the pinch as much because that wage growth has continued to go up in line, I guess, with what's going on to keep inflation under control.
Yeah, and like when you look at the number of people that are selling for a profit, those numbers are increasing at the moment as well. So, people are still making money. People still have that positive equity. A couple of other things I wanted to note about CBA, they're indicating that the inflation numbers are down, and they believe at some point in 2024, we'll see inflation return to the target 2 to 3% rate. This makes them believe that the cash rate should be held at 4.1%, but there's still a chance that there may be another 25 basis point rise at some point in 2023. Then they believe that the cash rate will actually be held until around May next year, May 2024. And then in May 2024, we'll start to see that cash rate decline and that monetary policy starting to ease, which we know there's a really strong correlation between those interest rates declining and property prices rising. The other interesting thing was the fact that lending is actually increased. So there's more people approaching the banks for mortgages at the moment, Australia-wide. So this indicates there's more demand from the buying side at the moment. So fingers crossed we continue to see the listing numbers increase in alignment with those that increase in the lending as well, to create a little bit more of a balance. If those supply numbers don't increase and if the demand for buyers continues to increase, then we should expect property prices to continue pushing forward. We had KPMG come out last month say that they believe property prices Australia-wide will increase by about 15% over the next 18 months. But was there some other things that you wanted to mention, Chris?
Yeah, I reckon just in line with what's going on, the property price growth or the predicted price growth, the sentiment, the rates coming down. Some interesting stuff to add is in the building side of things, because we know that with construction boom comes job growth. Right now, the cost growth is stabilising within the residential building sector, according to CoreLogic, but dwelling approvals are at the lowest level since 2013. So like you were talking with that supply and demand, unless there's some new approvals and some more dwellings hitting the market, I think we're going to see a really big pinch on the supply side of things. To kind of combat that, the Deputy Premier of Queensland came out and announced at the end of August that there's a master plan for 900,000 new homes just in southeast Queensland alone. He wants to see about 200,000 of those in Brisbane, about 150,000 of those on the Gold Coast, and about 120,000 of those in the Moreton Bay region.
Let's go.
I know. So I think there's got to be a really big change. He's basically saying that the 12 local government areas in southeast Queensland are going to have to adjust their planning schemes to cater for this, because he wants to see 70% of that number be infill land rather than new development. So it'll be interesting to see how it unfolds, but over the next 20 years, he sees that this is a really big need to combat that supply issue.
Just on a personal note, like obviously we help a lot of people purchase investment properties in Brisbane, and one of the requirements is to try and get as much land as we can possibly afford. So it'll be interesting to see how many of our clients have had that influence their properties and whether they might be able to add additional supply. Like, it happened to one of my properties where I bought it for a house and granny flat potential, but now it's got like more subdivision potential, and it sounds as though this is going to continue happening, which is, really good news for those folks that already own properties up here. And obviously, if you're planning to buy in Brisbane, it's really important to understand those changes to the town plan so you can take advantage of that opportunity.
Yeah, totally.
So this October property market update has been amazing. There is so much positive information out there at the moment. So if you've been sitting on the sidelines waiting for the bottom, it was in January or February of 2023. So it's time to get your house in order if you're thinking about getting something under your control. But anyway, that was the October property market update. I hope you guys enjoyed it. If you did, give us a thumbs up. share this video with somebody, and please subscribe to our channel. But anyways, thank you so much for listening. We'll see you next month for another market update.
Woo! That's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.